making in the month of October, so they'll have public hearings. So this will be a time that if you want to make your voice heard on the, this will be for the 2020 sick leave that's going into effect. The 2020, that ship sailed, we're where we're at through the end of the year. But on the 2021, then the final rules they anticipate coming out in November. So it's going to be a pretty quick turn from the time we see final rules until this goes into effect January 1. But I just want to make sure everyone had that on their radar that, you know, we are looking for these to come out and, you know, make your voices heard through rulemaking, because it really does make a difference. That's one reason they did this informal session a couple weeks ago, was just to get some initial thoughts of things we're already seeing. So those are the two new things I had for you this morning.
Awesome. Thank you, Kristen. And we are, in fact, working with Kristen and with Building Jobs for Colorado, the 13-member construction industry association that we are part of, so that we do a paid sick leave seminar to get everybody in the construction industry that participates in these associations on the same page. And we're right now working on dates among the associations to see if we can get Fisher Phillips in October to do this session in October. So look for that. And it may even be an October and a December once final rules come out. We may want to do something that both gives us an opportunity to engage in the rulemaking, as well as then have a conversation on what's final. Kristen, the other question that I had for you that isn't really COVID related, but is going to come up on January 1, and that's overtime. The overtime rule. Is there anything that COVID has impacted or anything that changes with the implementation of overtime on January 1?
Not that I've seen directly. I mean, what, you know, we've been putting some alerts out on is the making sure employees, you know, how are you tracking time if they're working from home? Because that's, you know, we see that as an issue under FLSA, right? How are you tracking, you know, because if an employee calls and says, hey, I logged back on and worked another hour, even if you didn't want him to do that, you've got to pay for that hour, but then you need to go back and look at your policies and say, okay, you know, how do we keep people from doing this? Because I mean, you know, I've got my paralegal working from home, and she has to take those 2 breaks, and it drives her crazy because she's like, I'm in the middle of something, and then she gets a ding about, don't forget, you got your 10-minute break this morning. So, you know, everyone's dealing with it, right? So just think about that, you know, you want to make sure of how you're still following that rule. So that's really the most we've seen. I'll make sure before we talk next if there's any other kind of COVID specific issues on it, but mainly it's, you know, making sure we're tracking it and paying people when they're working from home.
Right. And again, treating that in the office, remote work is like being in the office.
Right, exactly.
So, yeah. Well, so since we touched on labor and employment, I'm going to turn it over to, again, our new industry partner. Welcome to the IEC community and family. And I'm going to introduce Megan, Joe, and Grant. I don't know why I'm having trouble with that this morning, but Grant, I'm so sorry. Grant and Megan and Joe, welcome. And I don't know who wants to speak first, but they're going to talk to us a little bit about what they're seeing in the HR realm that companies are having to focus on and make change again because of COVID, but things that are impacting normal HR operations. So Megan, why don't I start with you and let you introduce the team?
Awesome, thank you so much. Yeah, my name is Megan Corey McMahon. We are new members of IEC and super excited to be here today. We had a really good conversation with Marilyn last week about, you know, what we do and how we've been able to help businesses during this time. If you don't know what a PEO is, I just thought I'd just give a brief introduction. We're a professional employer organization. We do HR outsourcing services such as risk management, HR, health benefits, and payroll. But during, you know, this COVID time, we've really taken a deeper dive into our HR services. A lot of companies, you know, that's really the backbone of what we do for them and the way that we can help them the most. So I do have Grant Loomis on here today, and Grant is one of our HR generalists. He works with our clients, small to mid-sized businesses, and has really more experience than what I can touch on. So I'm going to introduce him, and he's going to touch on just a couple things that we're seeing throughout COVID, and then what will impact, the more the near future, and for the rest of the year. So I'm going to turn it over to Grant, have him introduce himself, let you all know what he does, and then kind of touch on a couple things.
Great. Grant, welcome.
Thank you, Marilyn. I appreciate it. Can you guys hear me?
Yes.
Just making sure. Sometimes I have technological issues as well, Marilyn. So yeah, like Megan said, I'm in HR with Oasis. I started actually about 5 weeks before we all started working from home. So I have seen what Oasis is, kind of capable of. I worked in the public sector. I worked for a smaller PEO, and it's been really nice to work for a company that really hit the ground running as far as being able to work with clients, even though 95% of our staff is working remotely as well. But Megan and I discussed a couple things yesterday about what we're seeing, and some of it is short term. But the business environment and the pandemic environment that we are living in is really it's very fluid, right? So I am working with a lot of different clients in a lot of different industries, including yours, on dealing with all these different changes. I mean, it's a novel virus, so we know everything. We get different information from the government consistently, each state, because I have clients in a lot of different states. But right now we're dealing with a lot of the FFCRA and the CARES Act and the expanded FMLA. So really, it's going to be interesting to see if the government can expand that, because that all ends, Kristen can correct me, but right now, basically all that ends at the end of this year. But so we have a lot of employees, and as you guys are well aware, that have students, they have children that are students, and I'm working a lot with managing those expanded FMLA. So we have, we have those employees that can only work in the morning because they have childcare in the afternoon. Back to the fluid part of it, we know that these, schools are closing and childcares they're closing periodically if there's a COVID outbreak. So really, it's working with our leave team to manage that. And recently, originally, the DOL had ruled that intermittent leave was up to the employer's discretion if they were going to allow that. But then a judge, I believe out of New York, a federal judge, struck that part of the law down. So now employees are entitled to that intermittent leave, so that employers and employees have to come together to figure out a schedule that works the best for both meeting those business needs, but also the childcare of those employees. Additionally, what I've been trying to read about a little bit is really we're in this kind of situation until there's a vaccine. But once there's a vaccine, I'm very interested to see where things land as far as employers mandating that you get this vaccine, because clients will potentially require it for you to come onto the work site. And so that is going to be something to watch, optimistically at the beginning of next year, if that's when the vaccine starts to roll out. Another thing that's been kind of a consequence of what we're seeing in people working from home, and unfortunately this being an election year, and some of the things we've seen over the course of this summer, is I've actually had to work with multiple clients in the capacity that we have an e-learning site. So we, if you are an Oasis employer and employee, we have essentially different workshops that we can assign to employees and require them to do it, whether it's harassment or if just basic Excel training. I mean, it kind of runs the gambit of anything you can think of. But I've had multiple clients that I've had to help them assign social media workshops to employees, because they are posting things that reflect negatively on the business. And so I think there's a lot of, this work from home environment, and I'm sure you guys have discussed this before, it's taxing, right? To a degree. Some people really thrive in it. I have my good days and my bad days from being in my basement office. And I think some employees are responding to what they see in the media and on social media. And it's difficult to really take the temperature of your employees. So it's very important for you to check in with your employees to see how they're doing, you know, and try and reach out proactively when and where you can. I think we're all in a very stressful situation, particularly small business owners in this business environment, but it's really important to, you know, reach out to your employees and, you know, the ones that you aren't seeing every day anymore, and make sure that they're doing okay, so that they can, you know, continue to thrive and get the work done, and not maybe act out in whether it's absenteeism or on social media. So those are some of the things that I'm seeing day to day, and maybe kind of looking down, you know, maybe our new reality for the time being. It's been a real mix of, you know, being proactive and reactive, but you know, I like challenges. I like change. That's part of the reason I work for a PEO. I have a lot of different clients, so I actually kind of enjoy having a lot, you know, doing HR for a lot of different individuals, you know, and doing the soup to nuts parts of the jobs, whether it's, you know, employee relations situations or electronic onboarding and managing all that, as well as, you know, those more strategic things, retention planning, succession planning, and then also now in this environment, you know, what do we do if the vaccine comes out? Are we going to mandate it? That kind of thing, and working through what the law says now and what it will, you know, what we think might transpire later. So I don't know if anybody has any questions for me, or if I just spoke a little too fast about all that kind of stuff.
Grant, while I'm waiting to see if anybody else has questions, and feel free to put them into the chat, there were a couple of points that you made that I was hoping that you would speak on, and I have some follow-up questions around.
Okay.
One of them is that you mentioned the stress and mental health. When I was doing the research for each of these topics that we were going to be talking about today, one of the articles that I read was, you know, we're doing temperature screens, but are we doing mental health depression screens because of the impact that some employees are feeling? And I'm not actually suggesting that we give everybody a depression screen, Kristen. I'm not saying that, but I am curious about, you know, compared to this time last year or compared to pre-COVID, what we're seeing in that mental health and wellness realm. We've talked a little bit about that topic on one of our prior calls, but I'm just sort of interested in what's it look like on the ground in reality with that kind of impact for people, and how as a PEO or from an HR perspective have you been able to respond to employees?
So, you know, I am not engaging very often with the employees themselves. Most of the time I'm working with a liaison. And so a lot of our clients are on, on some benefit products of ours that provide employee assistance programs,
Mm-hmm.
right? So I have had multiple clients that have asked for that flyer. I was proactive and sent it out. You know, we have such a wealth of resources. Sometimes I think our clients are intimidated to even get onto the website and even look for this stuff. It's just, there's so much information sometimes. But when they reach out to me, it's very, you know, and so I try to get ahead of the curve. My concern, Marilyn, honestly, is this started as we moved into spring and summer. And I think as the season turns, it will be a much different animal because, you know, people will in big chunks of the United States, particularly ones that I work with, won't be able to get outside as much. The days will be shorter. If you're in a basement office like me, it will be dark when you go into your office. It will be dark when you come out of your office. And so, you know, I think it's one of those things that, you know, employers need to be proactive, but what that looks like is really just keeping their ear to the ground to see if those employees are acting different, if their emails have become less, you know, the tone of emails is not always easy to tell where people are at, but sometimes it is. If somebody always starts their emails and ends their emails very sunshiny, then you're clearly, if they've stopped doing that, you need to maybe reach out to them, or maybe it's worth, you know, depending on how many employees you have, or, you know, delegating this to managers. making sure that you're talking to an employee on the phone every other week, every week, whatever you can manage. And so I can't speak too much to how much that EAP program we have is being utilized. But I know that I have had some clients, in addition to me sending it out, ask for it again to make sure that they have those resources for their employees. And you know, I'm very grateful. Oasis has been very engaging. You know, they send us an email every Friday, basically with different things to get us to you know, get off of what we're, you know, the work that we're doing and just kind of distract us. You know, they have reached out to us and you know, your managers have, our managers have just been really good about reaching out independently and making sure everything's kosher. And we all got a pizza. I mean, like silly. I mean, it sounds small. And it is, but it also can make that, you know, that when you don't have that human interaction to demonstrate the value, you know, that you value your employees, it's really important to try to maintain it the best way you can, even though you can't replace the in-person, you know, interaction.
Right. The recognition piece in whatever way that the recognition piece takes place. Kristen, is there anything that you have to add to mental health? And then I also follow-up question for both Grant and Kristen and anybody else, if you've had this experience, was the thing you mentioned about social media and how maybe social media, being at home, maybe makes it easier to spend your workday on social media, or to have a more extreme position, however that position may come through. Whether it's about your company or whether it's about some other topic. But Kristen, I'm wondering if you've had any of those social media challenges at all with your clients, as Grant mentioned, that it's something that they've encouraged the e-learning content around.
Yeah, no, that's a good question. Yeah, I was actually talking to a client last week because you know, he's a restaurant owner, right? So he's dealing with a lot of young people. So social media is kind of how they get their news a lot. And that's one of the problems he's having is that, you know, the information that they bring into the workplace, you know, and it's almost like if someone was sick, they're saying, well, I don't want to work around that person, right? So even if they've done the quarantine or they've been tested, you know, they're like ostracizing that person, right? Because they're reading that, you know, I could still get it. And how do we know you know, that they don't have it? So yeah, I think that's, you know, I talked with him about, you know, creating some written policies and not, you know, so that way they have it in writing, you know, and they're referring to the CDC and really just trying to emphasize that with the employees to try to combat that issue. Because yeah, we've seen that when employees have gone back into the workplace after having COVID, how are they treated by coworkers? So that's something to be aware of, you know, because yeah, that's what, you know, people don't want to be around them. They don't want to work with them, especially, you know, if you're servers, right, and you're in closer quarters. So yeah, definitely an issue. And I was thinking on the mental health one, Marilyn, is I don't know if any of you went to the CSA Rocky Mountain Safety Conference last week. But Mark Ashby, he's a friend of mine, and he actually speaks on that quite a bit, about watching for drug and alcohol disorders, and that becomes a mental health. And a lot of what Grant said is kind of the things he points to. If you see difference in behavior, that you need to ask questions, you know, and he's a big proponent of, you've got to get in your employees' business a little more than maybe we used to. And you've got to ask those questions. You've got to, you know, find out why their behavior is different. Because he looks at it from a drug and alcohol abuse angle. So yeah, I kind of echo Grant's comments. It's a hard one to address when people are working from home, but we've got to be on top of it.
Well, and Grant, as you said, moving into the fall and winter with folks that do have seasonal affective disorder, with COVID, with drug and, you know, mental health or other issues, it's kind of a you know, it's a perfect storm, if you will, depending on where we are in the season. So Joe with Oasis, Joe, is there anything that you wanted to add while we have the HR services discussion and the things that we want to be top of mind about? One thing also, when I talked to you and Megan last week, there was a lot of discussion around, and Kristen has even mentioned having written policies, but we're going to be coming upon a season where there's going to be new benefits enrollment and people updating their employee handbooks. Is there anything in that realm that you've seen changing as a result of COVID for future planning, not just temporary policies that we might have in place, but things that might be long-term?
I mean, I think Megan and Grant did a great job. I'd say one thing on the benefit side is, like you mentioned, a lot of people are starting to kind of plan for the new year, and a lot of people have their renewals come January 1st. And so, especially with everyone working from home and, the social media, people also have access to looking for jobs more. People are kind of always out looking now and figuring out, what company is going to handle it the best. They kind of look at their company and look, how did my company handle this pandemic, and how did other companies handle it? And, we're in a society where, based on a little bit, a couple dollars here or the benefits package here, people are looking to jump ship. And because everything is coming up for renewals, that's, Oasis, one of the things that we do is offer those kind of deeper and richer health plans to our clients. So just want to touch on that real fast.
Cool. Yeah. Well, in fact, the whole benefits administration process and open enrollment is going to look really different for people this year. So that's another thing to be thinking about. If you normally bring everybody together in a big group to talk about what the new options and other things are, that might be something else that looks very different this year. I'm going to take a moment now to keep us on track and, again, be formulating your questions. But I want to hear from the Federated team, Brandon and Brian. Again, will you give us all a little bit of background about bonding and surety in general, just as a base level of, give us the 101, but also then tell us why it's looking different and how it's looking different in a COVID environment. This is something that almost every year I have a conversation with a contractor that is ready to participate in a bonded project and isn't ready for it, or it's just very different. So if you can kind of give us the 101 and then the how that's an impact. But welcome.
Yes, absolutely. Thank you. Thank you for letting me talk to everybody. Just to give you a quick background. So I've been in the surety business for 13 years, 10 years as an underwriter, and then also about 3.5 years now more as the direct contact for contractors to get bonding. We are in the midst of seeing a major market change in the bonding world. This hasn't happened since 2008, when the recession hit in 2008. A lot of people lost money, a lot of developments went under, and the bonding world changed. And we went into what we call a very hard market from 08 to about the second half of 2012. But a phenomenon occurred in the second half of 2012 through, I would say, 2018. We actually went into what was one of the softest markets we've ever seen in the surety world in probably 50 plus years. It seemed like money was flowing in, every contractor was making money, projects were much more widespread than through the recession time, and bonding became a lot easier to get. People, larger markets were willing to write riskier bonds. And for those of you that maybe a little 101 on bonding itself of what bonding is it's a third party guaranteeing a contractor is going to perform the contract the way it's written out, whether that be by time, payments, all of that. The surety is saying whatever the contractor has promised to do for that project, we're backing that up. And so we're guaranteeing a project. What we are starting to see with the current environment is a lot of private money over the last few years haven't required general contractors to make their subcontractors bond back to them. And we are starting to see a major shift in that. But what's happened this year is we already started to see a slight shift at the end of 2018 and definitely into 19 of the market kind of shifting back towards harder. It had gotten too soft. And when I say by soft, you know, a bond, you can't differentiate a bond, right? Everybody's bond forms have to say the same thing. They're just guaranteeing the project. So the only way a surety company can differentiate itself is in the type of requirements it requires to write the bonds. And so what we started to see is industry standards for 20 plus years start to go out the window as far as what companies were requiring contractors to do to actually get a bond. And to be honest, it got a little loose and fast out there. We started to see indemnity being waived on certain things, which is that's kind of crazy. The type of financial presentation and financial strength started to deteriorate a little bit. You know, and what requirements it took to get certain size of bonds. But one of probably the biggest thing that's happening now that I'm trying to make sure I relay to all of our clients is there are people requiring bonds now that have never required before. I can tell you story after story of contractors telling me over the last few years, hey, I've worked for this guy for 25 years. He's never required me to bond before. And now I'm getting the phone calls, man, you're not going to believe this. They asked me for a bond. And I think it's really important to not only let people know that that's happening, and it's across the country. This isn't a state or regional issue. This is a nationwide phenomenon that's happening. But what I think is more important is to sit down with people and make sure that they have everything lined up to be prepared to do that, because that is the direction the market's going. And Marilyn, as you said, I can tell you in my years of experience how many times contractors have came to me going, I need a bid bond tomorrow. I had no idea they were going to require me to bond this. And now we got a lot of work, you know, we got to get a lot of stuff to make that happen in a very short time. So it's better now to start making sure that everybody's got their ducks in a row, that, hey, if somebody's going to require bonding, are you prepared for that? One of the things I would like to touch on that is I think there is a gross misconception out there when it comes to bonding. A lot of, I would say, small to mid-sized contractors, when you just mention the word bonding to them, they kind of cringe up and they're like, oh, I don't want to deal with that. Well, I think that most of my clients would probably agree that once you go through the process, it's not near as bad as what they thought. You know, do we have to get some information? Sure. But one of the things we can do is customize that based on your needs. Obviously, somebody who's wanting to get a bond on a $10 million project is probably going to require more information than somebody who's only doing a $100,000 project. So we can do that, and we can make it to where it's not a scary process. But one thing I would say right now is we have to be letting all the contractors know that it would be in their benefit for the future, especially going into 2021. I think we're going to see an even bigger increase in bond requirements come 2021. One thing that's kind of scary that we don't know, the unknown of 2021, is what are the budgets for 2021 going to look like? All these tax breaks and all these things that, you know, different states and even the federal government's allowed. Where's the money for all these projects going to come from to allow these contractors to go after these projects? So that's something else that we need to be prepared for. Do you have the relationship with other GCs and things to get private projects? And don't bank on that just because it's a private project that it's not going to require bonding anymore, because it probably is. Brian, do you have something else you think I should touch on?
You can touch on what you said the other day in the meeting with people pulling out of the bonding.
Absolutely.
And in the raising of the credit.
Yes. So when I say that the market was really soft over the last 5 or 6 years, there's different levels of the surety market. You know, we call it small to mid-size. You know, I'd say anything 15, 20 million under is probably small to mid-size. Then you got your mid-size, which are 20 to 50 million. And then you've got your, what I call large, which is 50 million plus projects. And during the soft market, what you saw was a lot of what I would call large surety players dipping down into the small market, right? They were willing to take on some smaller clients, write a little riskier business when that's not their niche. Well, what we've already seen is, I mean, literally within weeks of the shutdown, is these large sureties start to pull out of the small market. We saw multiple large markets shut down what they had. They had what they called basically quick bond programs, which are just credit based, where people could turn in an application, they'd pull their credit, and they could get minimal bonding credit based solely on that. Immediately when the shutdown happened, we saw letters from other sureties going out saying, hey, quick bond's been suspended, you know, or whatever they called it, fast track, whatever, there's multiple terms for it. But what we're seeing is a lot of the larger players are really starting to tighten up on their underwriting with the smaller contractors. So, you know, there's going to be people that come 2021 when their 2020 financials come in, that maybe they didn't lose money, but they were break even, that their legs are going to get cut out from under them by their surety, because they're just going to say, yeah, we're out. And so people really need to be prepared for that, and make sure you're partnering with a bond company that I would say recognizes your place in the market, and is probably not going to knee-jerk react when there's some adversity. Because I think we can all agree in our current environment, no matter what realm, whether it's, you know, human resources or accountants having to account for PPP and how all that looks, we're still on a long road for adversity and trying to figure all this out. But it's one thing that we definitely got to get prepared for.
Great, Brandon, thank you. Again, this is something that at least once a year, I have a conversation with a contractor that either needed to do a bid bond and wasn't prepared, didn't have the financials in place in order to put that information forward, or was just inexperienced in where to even go. And like I said, I was at an event yesterday and the subject kept coming up. So I appreciate your time on the call this morning. And I will see you and Brian later. Brian, did you have anything to add before?
I have one more thing and that I wanted to mention, and then I want Brandon just to touch on quickly, because I know we're on a short timeline here. But I think one of the important things in terms of trying to do the process early is understanding where your capacity is. We don't want contractors to miss out on a job because they don't know where their capacity is for bonding. And capacity is actually one of the ways that we differentiate ourselves, because it's not just a hard and fast, if you've got $1 million capacity for a bonding, that's all you have. So Brandon, if you could talk about how we kind of adjust for that as well.
Well, yeah, so we try to take more of what we would call a common sense approach to the underwriting. And what I mean by that is, it's real easy in the underwriting world to become black and white and check a box, right? If this ratio isn't here and this ratio is not there, it doesn't qualify. One of the things that we are, when you specialize in the small to mid-sized market, like we do, when I mentioned earlier, making sure you're partnered with somebody who understands your place in the market. You know what? Maybe we do have one of our clients that comes in and their financial statement for 2020 shows a loss. Well, let's touch on that. Let's ask questions. Why did that happen? What's the plan going forward, versus just sending them a letter and saying, hey, you lost money, we're out. That's just, there's no place for that right now in the marketplace, because there is going to be adversity, and we all have to be on the same team and making sure that we're willing to look at stretching. And as Brian said, maybe we do pre-qualify somebody for, okay, yeah, you qualify for up to $1 million. One of the things that we will do, though, is if they say, hey, I got $1.2 million, $1.3 million job coming up, and we've gotten everything in place, obviously, to set up the million, we'll be willing to listen to what is the reason to stretch and be willing to stretch. But that's because we recognize this part of the marketplace.
And if you're halfway through the job.
Well, yeah. And so what's very important for contractors to recognize right now is how your surety company looks at your backlog, because it's viewed differently by different sureties. For example, one of the things that we do is we look at bonded only. So say an electrical contractor does service work and they do commercial work. Well, we're not really concerned with the service work, okay? But some sureties are going to count that against what your capacity is. We wouldn't do that. But also what we look at is on a cost to complete basis, meaning I write somebody a $500,000 bond and they're 50% of the way through it, I'll consider that there's $250,000 freed up of capacity. And not every surety does that. Some sureties look on a completion method, meaning if I write a $500,000 bond, until you're done with that bond, your $500,000 of bond capacity is ate up. So it's very important for contractors to recognize that difference, because as they plan going forward on what projects they want to go after, they need to know what their capacity is and where they stand of whether they're going to be able to get it or not. So that's one thing that I would make sure that all our clients understand, and one way we differentiate ourselves from other surety markets.
Brandon, thanks again. Brian, thank you. And Kurt, I want to introduce Kurt Olson now with Whipfly. And Kurt, this is another topic that Pete Aiden and I have talked about quite a bit. And I know that Whipfly deals with, works with contractors and other partners that work with bonding for your clients. And just want to ask you two questions. One of them is there anything that you have to add to this bonding conversation and what you might be seeing from an accounting perspective through COVID, or as we move into future planning for business? And then also give you an opportunity to share what the latest PPP updates are. I know there was some short-term interim guidance offered that I want to make sure that people have top of mind. We also have about 15 minutes left, so if you have questions for any of our subject matter experts, please shoot us a note in the chat so we can call upon you to ask. So Kurt, first let's talk a little bit about bonding. Oh, you are still muted. We can't hear you.
Let's try
There we go. Yeah, there we go.
Okay.
Thanks, Kurt.
Sorry, had the wrong speaker selected. So, I guess as far as what we're seeing is a lot of our clients for 2020, and as far as construction goes, they're still having a pretty decent year. Looking out into 2021, the jobs are slowing down a bit as far as the availability to bid jobs and also the number of people bidding jobs. I'm curious more on how bonding is viewing these PPP funds. It's going to be more interesting come when we're issuing financial statements, going, hey, we're recording these big liabilities at year end, knowing full well, or hoping, I guess, that the full amount is going to be forgiven. So I'm curious what the bonding is, how they're viewing those liabilities.
As is everything right now, I think it's a pretty fluid. I don't think anybody's willing to just take a hard stance of, hey, this is exactly how it's going to impact your balance sheet. I think for us in underwriting, from what I've understood, I haven't had it necessarily be a make or break on a situation yet. So that'll be very interesting to see how underwriting comes down on which side of the fence. I do know that different sureties are looking at it differently. I mean, some are just actually considering it's just full working capital. Hey, the cash you got's liquid. We're going to assume that it's going to be forgiven, and that's the ratio we're going to go off of to determine your capacity. Some are moving it more to what we call a long-term asset, and moving the liability to a long-term, to where it really has no bearing on the liquid side of things. But on the overall net worth side, it's probably being considered as an asset without the liability being considered. So therefore, your equity is increasing. And then the other is, just full blown expecting that it's going to have to be paid back. So it's almost just a wash when it comes to the equity and net worth. I think one of the big things you're going to see from sureties when they're looking at the financials with PPP money concerns is, how is that money being used? Was it taken in, set aside to make sure that it does take care of shortfalls or any issue? Or is it, hey, I'm just going to go buy a bunch of new equipment with this and just bank on it gets forgiven and now I'm way ahead? I think that's more the concern of the surety is, hey, what are you doing with this money? Are you leaving it in? Are you going and buying a bunch of things? Making sure contractors, I saw a news story on a contractor in Miami who, I say contractor, he was a relocation company, and he went out and bought 3 Lamborghinis with his PPP money. And it's like, okay, let's make sure that that's not going on. But, you know, to kind of, I guess, vaguely, not black and white answer your question, is different sureties are going to view it differently. And I think that's why I was curious to hear what you're seeing on your side is, what are we hearing from the banking industry and the government of the forgiveness of this? Is it going to be as easy to get forgiven as what it sounds, or are we starting to see maybe some backtracking on that? Because that's going to determine in 2021, when we get all these 2020 financials with the PPP money included, how do we account for that going forward? Right now, it's fluid. It's kind of more or less, does, you know, if somebody's on the fence of qualifying and they got some PPP money, it's like, all right, now they got some more cash for the cash flow. Yeah, we'd be willing to stretch a little more for them. But as far as how to just specifically handle that liability, I think that's a case by case and surety by surety. There's not an industry that I know of, there's not an industry answer out there of, hey, guys, this is how we should be viewing this.
Grant introduced the fluid word earlier in the conversation, and it sounds like not just with HR and our ability to be flexible with our employees right now, but it sounds like there's a lot of fluidity in what's happening between these other these other economic issues impacting businesses. We've had BOK Financial and other bank perspectives on. And again, Kurt, sort of back to PPP, it sounds like that too is still fluid. We keep waiting and waiting, and we got some information, and now we're hoping that we get different information, I understand.
Yeah, so it is still very fluid. I mean, it's still changing. I think the rules are still out. Some of them are still out for interpretation. Some banks are very hesitant to even start accepting the forgiveness applications because they don't know on their end how that's going to impact them. So that is still very much a working process. I don't know how many people have tried to apply for forgiveness, but I do know a lot of banks still are not accepting the applications, even though the SBA now is. Some other items with it is the PPP loan. When it first came out, we talked about this a little bit before, the PPP loan in the actual act said, hey, this is not going to be taxable under this certain IRS code section. Well, like everything related with taxes, there's 5 other IRS code sections that can allow it to become taxable. So they treated and said, okay, fine, yes, it won't be taxable under this certain IRS code section. However, we're not going to allow you to deduct the expenses that you're essentially being reimbursed for. So if you get a $500,000 PPP loan and you use it for $500,000 of payroll, you don't get to deduct that $500,000. You end up in the exact same place as if they had taxed the forgiveness on it. So that's as of right now. I know a lot of lobbyists, a lot of companies, associations are all pushing very hard to get this so it is not taxable, as that was the intent of the law. Everyone is saying that was the intent of the law. But as of right now, it is essentially taxable for people that get it forgiven. But with that comes some possibly planning opportunities, or possibly not. Because the question is, so for financial purposes, if you have an audit or reviewed financial statement, you're not allowed to recognize the forgiveness as income until it is formally forgiven. Well, if I'm a September year-end company and I don't apply for forgiveness until October, well, at September 30th, I have a liability and I don't have any forgiveness of debt, essentially. So does that allow me to take those deductions on my 9/30/2020 tax return, and then in my 2021 tax return, then I won't have those then I'll have to pick it up as income, essentially. So as of right now, there's not any clarification on that, but could be a little planning opportunity if 2020 is still looking like a good year and 2021 isn't looking as great. So we're still waiting on guidance on how to treat that, but that is something that's out there with the PPP loan. Other thing to kind of stress that didn't fully make it out to everyone, I don't think, is there are two forms for the forgiveness application. There is an easy form. So if you didn't have a change in your full-time equivalents during this period, you can use the easy form. There's a few other requirements, but that's the main one. And that form is simpler. It's still a typical government form with lots of schedules and different forms you have to fill out, but it is easier than the full out form. So definitely want to consider that if you haven't had a change in your full-time equivalents.
So that full-time equivalent, you still could have personnel change, but if your overall FTE hadn't changed, you could still use that form?
Yep.
Okay.
So, yeah.
Okay. Very good. One of the other things that was mentioned was just around employee onboarding that I wanted to ask some of our subject matter experts, and Kristen, Megan, Grant, how has that, because it's, we still have been doing hiring and firing and employment change during this period of time. And I'm just wondering if you're seeing anything different that would help our companies plan in that realm.
I am just speaking on myself. I'm not completely aware of any huge changes. I know just from a recruiting standpoint, I mean, that is interesting right now because a lot of, this is coming to an end, but people who were put on unemployment, some people are making more on unemployment than they were at their jobs. So from a recruiting standpoint, I know onboarding and bringing in new employees has been a challenge for some companies. But I don't know if I could speak as much to onboarding experience. I don't know if Grant can more better than I can.
Marilyn, I want to make sure I understand. Were you asking in regards to the PPP loan, the hiring and firing impacting that, or just generally?
No, it made me think of getting the clarification from Kurt just made me think that you had mentioned onboarding during the time of COVID. And I'm just wondering if you're seeing companies make any changes in how they're doing onboarding, how that has had an impact. If there's anything, new lessons learned, if you will, that other companies could benefit from what others are doing.
I haven't seen any changes wholesale amongst my clients. I have a nice balance of clients that were considered essential. So they've took the CDC guidelines, they're protecting their staff, but they're really kind of running things as is. I did have one or two clients that had to get onto electronic onboarding because they were doing just paper applications, but they weren't working from the office any longer, so they had to move into the realm of electronic onboarding. And so just kind of walking them through that, understanding the USCIS and their I-9 requirements for the time being and how those will change and are changing, but nothing particularly wholesale. I think there's a lot of wait and let's see. So I do have some clients that are continuing as if nothing has changed because they were almost completely remote to begin with because they're a call center. But I think there's really a wait and see. Right now I'm just starting to have my clients start to utilize our PPP estimator and our reporting system to start to apply for forgiveness. So I think I'll probably know in the next month and a half to see what happens. My guess is that the government, at least from a the House and Senate getting together to have another stimulus package. I don't think that's going to happen before the election. I mean, that's just my gut feeling. I'm speculating, but so I think everybody kind of wants to see how things are shaking, shake out before they, we're waiting on those executive orders from the Social Security tax deferral, if that's going to be something that's optional or not, which a lot of my clients are asking about. Which is just kind of kicking the can down the road because it's just an interest-free loan, as opposed to just waiving those taxes. So there hasn't been a lot of movement other than I think even my clients that are doing okay are just want to see how the next 5 months go, independent of the election. Just the vaccine, I think it's gotten in the ether that we're just expecting this vaccine in the spring, January,
Yeah.
February. And I
Right.
don't think that is managing expectations appropriately. I mean, that's my personal opinion, but, so I think there's just a lot of, we're going to hold and then just try to tread and we'll go when there's a little bit more information next year.
Great. Grant, thank you. So in addition to the technology challenge that I had of getting on, my watch is 5 minutes off and I realized that it is really 8:30, but my watch says it's 8:25. So, but just a final thing, Kurt, is there anything that you, we talked about this on a call a couple of weeks ago. Is there anything, Kurt, maybe even Kristen, to wrap up with what Grant said about the payroll tax piece? I know we've said, we've advised our contractors just to not be taking that out and to pretend that it didn't happen. Is that still the advice that both of you are giving to your clients?
I still think that's the best approach at this point.
We've been doing the same. Yeah, I think we put out a news alert about it and kind of said it's out there, but as Gray mentioned, you have to pay it back anyway. So yeah, we've said don't do it.
Yeah, yeah. Well, we've had some new folks participating in the forum this morning. Is there anything else? Unmute yourself and I'll know that you have something that you'd like to add or question to the discussion. I'll give you about 30 seconds to do that while we wrap up. Deb Radman, who has been, is normally our moderator and has been wonderfully silent behind the scenes, has been taking our notes. And so, Deb, thank you for taking on the note role today. We'll see Deb back in the facilitator role at our future sessions, but wanted to thank her for taking that on.
My pleasure. My pleasure.
As an extra, we've got a golf tournament tomorrow and lots of hands doing new things. And speaking of lots of hands, I was hoping that Leland's new assistant Sophie would have an opportunity to weigh in on how she felt about these new work from home policies and what it's like for her owner to be home more than normal. But Sophie has gone off to play ball, I think.
Yeah, she's currently eating some of the landscaping right now. So she has a short attention span. She means well, but she's very helpful.
It's just hard to get good help these days, isn't it, Leland?
I know.
That's awesome. All right. Well, thank you all for participating. We will be back in 2 weeks with our next member forum. If there's a topic that is top of mind for you, let me know and we'll make sure that we get the right experts on the call. Brandon, Brian, Grant, Kurt, Kristen, Megan, Joe, thank you all for sharing your wisdom with us today and have a wonderful rest of the day.
Yes, thank you, Marilyn.
Thank you.
And I'm sorry, go ahead. Go ahead. Real quick, I wanted to just let everybody know that's still on. Yeah, so it's the 16th is the next member forum. And then on the 30th, we've got a pretty special safety forum. And that is to schedule our 21 safety topic agendas. And this is something that we like to reach out to all of our industry partners and contractor members when it comes to what they see within their organization and maybe areas that they would like to focus in on when it comes to safety or their safety program. So it's a good one to attend. That's on the 30th so that we can track out get things on schedule and hopefully provide those safety forums for you coming 21. So thank you so much. That's really the only update that I had.
Wonderful. Thanks, everybody. See you all at golf if you're playing tomorrow, or other members of your team. We're looking forward to a sold-out 216-person golf tournament tomorrow.
Awesome.
Wow.
Scott, you playing
Here.
tomorrow? Nice hat, Leland. No?
Scott, thanks for being on. Appreciate it.
You're welcome. Thank you. It was a great, very informative session. Thanks.
Wonderful. Thank you.
Leland, I need a hat. I need a courtesy hat.
I got one for you.
All right, baby.
Good to see everybody. See you tomorrow.
Thanks all.
Thanks, Leland.
Thank you all.
Brian,
Bye.
great to see you.
Thanks, Kristen. Thanks, Brenda. Later, is Deb still with us?
Yeah,
Who is
there's-
D74?
I'm here.
Who is this down here? You guys know?
That's,
Brandon and Brian.
yeah.
Okay.
Who is
Thank
it?
you all.
That was
Oh, they're
Brandon
gone.
and Brian.
Oh,
Brandon and Brian, yeah.
gotcha.
They're gone.
Gotcha. Yeah, there were a couple of new names on the screen today. So that's
Yeah,
awesome.
we have what, about 21, I think was the max that I saw. on
Yeah,
the
well,
attendance.
you know, what's interesting, this is true for golf tomorrow too. A lot of our regulars are on vacation this week. The last week, this week, and next week, people are getting their end of summer vacations in. So lots of travelers right now. So, or, you know, taking their time off or whatever. So, but it's good. Golf tomorrow, 216, we're maxed out, and there are
Great
people that
job.
there are people that regularly play that aren't playing because they're traveling or because they still can't be customer facing. There's probably, I don't know, there's probably in the 15 to 20 that I know about. So imagine if those people, I mean, it's crazy how popular golf is this summer, because it's something people can get out and do and not be in a mask all the time.
Yeah, it's true.
Awesome. Miss Deb, what do you need from us for notes today?
I did not hear anything about links, but I'm going to go on everybody's site and look at the alerts and some of the other documentation that they referred to and try to just pull those links.
You know what? I think if just by their name you put whatever their, because I know Whitley and Federated and
Oasis.
and Fisher Phillips, they all still have their COVID like link up, so you could just link to whatever their COVID resources are. Oasis, a Paychex company, I don't know, but
They, let's see, somebody referred to something, but
yeah.
an EPA or something like that, or whatever it was.
Oh, an EAP.
EAP.
Assistance program, yeah, employee assistance program. Yeah, that's pretty standard for a lot of companies to have as part of their benefits package. But if Oasis has a site, you can just include their website. Plus they're a new
Yeah, and they also
company.
had something on their site about stress and mental health
Okay,
that
yeah.
he referred to as well. So, you know, I'm just going to go back through and I'll find all of that and put the links in the report.
Perfect. Yeah, this whole bonding thing, you know, we need to do another, we've done this before where we've had like a quarterly lunch or session where we've talked about bonding.